Okay, folks, so we've got a lot to talk about. The market ended pretty damn slow with some concentrated sell-offs in tech, but also in the broader market. And as we approach a huge week, including massive companies reporting earnings, a Bitcoin catalyst, and a ton of other stuff, well, we got to talk about what to prepare for. And I'm also going to be talking about the latest with the AMC situation and what you need to know. And the only thing that I ask in return for all of this is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, let's go ahead and start. So I want to start you with a few updates. Now CLII, the SPAC CLII, has now turned into EVGO, ticker symbol EVGO. If you do not remember from earlier this year, EVGO was a leading charging station provider. They are a leader in what's called DC fast charging. Compared to standard chargers, EVGO's charging stations can charge vehicles in fractions of the time. Why would a customer choose one charging station provider over the other, you may ask? Well, the main reason is convenience. And there's two main ways that a charging station provider can provide that convenience. Numero uno is by having a ton of charging stations and having that proximity, that location convenience. If the charging station is near you, or it's nearby where you're driving, or you're working, or you shop, well, that's a charging station you're more likely to use. The second convenience factor is the speed of charging. Fastest charging stations are going to be able to provide a lot more convenience because you can get in and out a lot faster. So far in the charging station apparatus that we have in the United States, we've started building charging stations, but the fast charging stations are still lagging. And EVGO is a leader in fast charging stations, and in terms of actual proximity, it does have pretty good proximity to almost all of the areas where there's a ton of people who actually have electric vehicles. In the biggest markets like California, 80% of people live within a 10-mile drive of an EVGO fast charger. So in the areas where proximity does matter, hey, EVGO's doing pretty decent. But they have a lot more room to expand. If you look at ChargePoint, they're the leader in number of charging stations. But if you look at EVGO, they're the leader in terms of fast charging stations. And the latest news for EVGO was just this week, EVGO was named by GM as a preferred provider for EV fleets. And as you know, GM has started making substantial investments into EVs and has previously announced plans to spend $35 billion through 2025 on electric vehicles and autonomous vehicles. So this decision was seen as a huge endorsement of EVGO and resulted in a nice rally last week. Okay, another update I want to give you is an update on the coin of Bit. ARK Invest is going to be holding a Bitcoin-focused conference where they will talk about demystifying and destigmatizing a lot of the mainstream narratives about Bitcoin, which is more needed than ever given the FUD environment that the crypto market's currently in. And given the fact that pretty much every single day there's a new shite coin coming onto the market and trying to get people to buy it so that the owners can pull out. I think it's time we do something different by introducing Charlie Coin. Wait, let me see if Charlie Coin's already a thing. Charlie Coin cryptocurrency. I don't think Charlie Coin is a thing. Anyways, in this cryptocurrency Bitcoin event, they're going to have interviews with Cathie Wood, Jack Dorsey from Twitter, as well as some other notable Bitcoin and investment folks. And then on Thursday, you have a big Bitcoin mining event where they're actually going to be talking with Riot, R-I-O-T CEO, and MicroStrategy's Michael Saylor. So that's another event. And hopefully we get a new wave of press for Bitcoin that's not just negative. Okay, so what to prepare for this week in terms of earnings? Well, the most notables are going to be Netflix on Tuesday, which can help dictate some of the direction for FANG Big Tech. You have some random assortment of small to medium-sized banks scattered throughout the week. You have major telecom sector players, your Verizon, your AT&T. You have credit card, or at least financial service companies like American Express, Capital One, and Discover as well. I expect credit card companies to continue to do very well. You have social media players, Twitter and Snapchat, airlines, Southwest, American, United, and Alaskan. And what I'm getting at here is that pretty much every major sector of the S&P is reporting earnings this week. This will certainly be a very, very high stakes week. And right now we're in the economic period where we're actually getting data to match all the speculation that people put onto the market over the last 6 months. And what we're seeing is a lot of companies are indeed beating expectations, but they're showing a slowdown of growth in the upcoming quarters because you're getting that rebound effect starting to wear off. And the more we go through the recovery, the less that rebound effect is going to play. And the stock market needs to get onto a new train track. Okay, now AMC. So AMC's public price has continued a week-long overall bearish trend on Friday. Obviously with AMC, we don't have the full picture in terms of what the actual price is if you unveil all of the orders. But I think that one of the things that people miss when it comes to AMC is sort of the broader context and how trends play play here. One of the most powerful tools that short sellers have in influencing a stock price is the ability to accelerate a trend. For example, over the last 10 days, you've seen pretty much everything go down. To some extent, you've seen some very strong concentrated sell-offs in retail-heavy stocks that had a lot of short interest, but pretty much everything is sold off. But the reason that you often see hedge fund heavy, short interest high stocks sell off very quickly during overall market conditions is a number of reasons. The first one is oftentimes they're higher multiple, so when you have some of the big institutional money pulling out, it creates a ripple effect that causes other people to sort of get thrown off. But when it comes to some of the higher conviction retail stocks like say AMC, what you're going to see is if short sellers can't start their own downtrends, they're just going to wait for the market to give them one, and they're going to accelerate it and throw everything they have on it once it comes. For example, it's easier to convince people to sell AMC during a period of overall market uncertainty than it is during a period of market euphoria. And so short sellers are going to save some of their best manipulation tactics for the periods of time when people are already weak-willed and already want to leave the market. It's the difference between trying to kill a healthy bull that's galloping around and stronger than ever and waiting for that bull to get stuck a few times by some bull huntsmen. I stole that quote from a hedge fund show called Billions, by the way. But the point is that psychological tactics are much more effective when the bull is weaker. When a stock is going up dramatically day after day after day, or when it's at least holding strong, and the media tries to throw at you, sell AMC, this is a trash stock, you kind of roll your eyes because you're emboldened by the stock price. But when it's going down, it's about 10 times more effective to put FUD out there. It's about 10 times more effective to do any psychological tactic to get people to sell. So oftentimes when the stock price goes down very quickly and everybody starts panicking, that's exactly the point where a lot of short sellers will strike. Why do you think so many short sellers waited to release their short and distort reports until February and March and April, when they could have done it in December and January and early February? Well, because they had a bullish trend. They wanted to wait until the stock started going down. That way they could accelerate that trend instead of try to force a new trend. So my take in terms of what's going on right now is that, hey, you have a lot of hedge funds, you have a lot of big short sellers who were very frustrated that they couldn't change the trend of AMC for pretty much several months. Now they're seizing on an opportunity. Overall market FUD. They're like, okay, well, hey, the overall market is FUDding out. You have some of the larger long-term holders of AMC, some of the institutional money that you don't see holding probably a lot of synthetic shares behind the surface, pulling out. You don't see those orders. You have some of retail very fatigued and frustrated and starting to feel like it's all scam. So you're like, okay, well, hey, I have an opportunity right now to accelerate a downtrend. I'm going to dump everything that I have and throw the book at these retail traders and get this damn price down as fast as possible so that I can get people to panic sell. And to me, it looks like a lot of short sellers are banking on a broader market sell-off, or at least another broader market correction, to get people to panic and sort of sell some of these more probability-based bets. It tends to be the case that broader market sell-offs end up resulting in a lot of money being pulled from a lot of these retail-heavy stocks, as well as the broader market. They're banking that that's going to happen again with AMC. That being said, we're yet to see how effective these tactics are going to be, and mostly it's a psychological tactic, right? Because at the end of the day, the game is how do you get this down as low as possible so that hedge funds can cover at a cheaper price. The way to do that is to try to figure out how to get retail to lose faith in it and get them to go jump off the bridge and then swim home with broken legs. Hedge funds got themselves in a really bad situation here, and they're trying to slither their way out. And I suppose only time will tell how apes respond to this. Anyways, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. And of course, quick plug, if you'd like to learn how to trade, would like access to our private chat and daily morning briefings where we brief on all the biggest catalysts each and every morning, well, I'll go ahead and put a link to ZipTrader U below. But folks, please only join us if you're going to commit yourself to the process, practicing paper trading with every single concept and then never giving up when times get tough. The program was thoughtfully created to give you a process to learn and grow, but if you don't complete the structure and dedicate yourself to doing every single lesson and doing it and completing it as designed, then you're not going to get anywhere. When I buy something, I make sure that I'm going to get my money's worth out of it. So I expect you to do the same. And if you're wondering what broker to trade these stocks on, we always like to send new traders over to Webull. I'll put a link to them below as well. And signing up and depositing with the link below will also get you some free stocks. Anyways, have a great day and I'll see you in the next video.